Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Wow, seems like we started a little bit later than normal here. Okay. Where are we and what are we doing today? We are looking at the dollar index as usual. Since we always start this webinar off looking at the currency market, uh, we have no problem looking at anything anybody would like to look at. And we don't have to start at a currency, but I always like to start at a currency since, obviously, DocDow trades is a very active currency trading house. And you can see they do have lots of, I've seen on here, let me see, where is it at? Let's just check this out. I guess it would be one of these. Let's try that. And then go here, like that. And you can see they do definitely, there's people out there trading stocks. Where was it? I saw a group of stocks on here a couple days ago. Let me see if I can find it again. It was interesting. I saw like 5 or 6 different stocks also at the same time. So let's see if we roll over here. Maybe we'll spot it. No, I don't say confirmation Fibonacci downtrend, interest rate cut, rules for trading in the original Fibonacci. I saw a bunch of stocks on here one day. So we're very comfortable looking at the stock market and the stock indice market, and you name it, we'll take a look at it. Interest rate market, we have no problem at all on any of it. Let me see if I can find it on somewhere else. No, I'm looking now. Let's see, market behavior. What is market structure? The market structure trends. Bonus lesson. What is your strategy? I like that one. That sounds like something really good. Where was that? Let's see if we can find that again. I like that. That sounds like a really good. Well, here it is. Bonus lesson. What is your strategy? That's a great conversation in its own right. So I did see a bunch of stocks one day. Oh, here it is. Daily stocks. NVDA, Home Depot, Amgen, Uber, Walt Disney, MasterCard. See, they're stocks. They trade stocks too on these things. So we don't have to. There's Qualcomm and Apple and AMD and Eli, Starbucks, McDonald's. Interesting. Very interesting. So we can start at any particular point. We just naturally go to the, you can see on the spreadsheet here, the first row, the first 18, I guess you could say, is like metals and silver and copper and wheat and corn. And then the second grouping is the currencies. And then a third is some of these stocks that we're actually talking about, like Apple and Amazon and BAB, CME, Meta and Google, Goldman Sachs, Netflix, and Tesla. Then we look at some of the stock indices like SPY and Q. There's the VIX, TLT, which is an interest rate, the biotech, IBB. This is the Dow Jones Transportation Index. This is the finance index of the banks and so forth. And then there's NVDA there at the bottom. So we can do it all. We look at everything. But we always start off with the currencies since no one asked for anything else. So it just, no problems there. We're very comfortable at opening up at any place and time live, having conversations about these things. And I find, the DocDow Academy here has a lot of different interesting things. So I'm always interested. If it looks interesting to me, I'm sure it looks interesting to other people. At least I would think. So I'm just going to say hi, since I haven't seen anybody say hi yet. Let's see, which pair of glasses should I wear there? There we go, right there. Let's see, we're going to say hi and GM, and that's not General Motors. There we are. All right, now let's go over, and we're looking at the dollar index. And it has 6 different pairs trades to make up the dollar index. And you can see it's trying to lift up this morning. We're getting a little buying there, but last week it pushed it into the sell, and you can see it's been pushing down. In other words, this area is lower than here, where we went into the sell, and this area is challenged that low, and now it's moving up. And when we make it larger, like so, you can see there's that action, and it actually makes a new low there, and now it's trying to lift up today. And the algorithm is, let's see, where is the algorithm? The algorithm is trying to pop up with it. But the weekly is telling us that, don't be so excited right now. That's exactly what the weekly signal is telling you down here at the bottom. Because we are going into a second week now of this action. Let's see, where's it at? Let's see what that is. Got a text just wondering what that is. Let's see. There we go. So, I guess what we can do is move over to, let's take a peek at the euro and the pound, and we'll look at a lot of these pairs trades since no one's asking any particular questions. Let me have a sip of my tea. For me, I was sitting here doing things on here, loading things up, so it was funny that it's like we're like 3.5 minutes late. But that's the way it rolls once in a while, so we'll just do 3.5 minutes more. That's what's the benefit of having the webinar an hour before the New York Open versus right at the New York Open. There's the euro right there. You can see a little pressure on it this morning. Just why we're seeing strength in the dollar index. You can see here it's been in a long slide, all the way up there in the 112 area. I'm sorry, and it got down to the 104, below the 104, down to 103. Wow, the low there is 103.32. So they moved it down pretty much with this weekly sell. I guess the distortion from the Federal Reserve versus the open market. I think that's a good way of describing it. It even, it sounds like a really good title today too. The distortion, Fed distortion versus free market. I think that's a great title. I think let me put that on the title so I can remember that. Because sometimes I come up with really great titles and I forget them. By the end of the webinar, I've seen so many other stories and other action that makes us think, So that's a really good story to start off with and talk about. I find that very fascinating, So let's do that. We go like there and make that the title. Let's see. Fed distortion. Yeah. Because they're going to be lowering the rates again next week. And the bigger question mark is, will they basically, will the free market join in? We could look at like the evidence to that. Let's see. Let's find out where I can send that. Send it to Dukascopy Academy right there. Okay. Let's see. Okay, yeah. Okay, here we go. Let me just put the title in today right off, but I won't send it. Just in case I find something better and other people jump in and have a conversation. So, Fed distortion. Distortion verse V. No, let's try that again. V. Nope. Backspace. V. So verse free markets. Okay, that's when we just have to have free. There we are. All right, now we got it. Now I'm fine. Now I don't care. All right. So here we go. We're looking at the euro, and we see this big downdraft, right? Look at this big downdraft. From up in here, up in the 112 area. We go into a weekly sell. You can see it right there. The line's right on the edge of it. I think you can see. Oh, let's see if we make this bigger too. So you can see right here. You see that right there? Yeah, there it is. You can see it right there. And on there, that's where it started off with the weekly at 112. And that's where everybody was like, oh, Fed is cutting rates. It's cutting rates. It's cutting rates. And they do. That's, what is that? That's October. We tighten this up a little bit more. And what you see is here's the September cut right in here. This is the end of September. It's like, oh, hooray, hooray, they've done something political again. And the professional traders are like, this is crazy. This is crazy stuff. And so here, interest rates have been cut a 0.5 percentage point. And what does the market do? Goes the reverse direction. The traders and the marketplace says, no, this is not right. You get a little dead cat bounce, and then more selling again in the bond price, which means interest rates are rising. So what's the Fed doing here? Lowering interest rates. We should put that in there. We should write that because, this is a classic. How many times in a lifetime do you see stuff like this? So Fed lowers rates and market right here. Market raises rates. That's pretty much what that was all about right here. This whole thing, this whole glide down, and I guess we could draw a line in there even, and that's what that is right there. And we can go like that, and make that the same color. If I can figure out which color that is. Is that it? Yeah, that's it. And so that's, this, and then here you have the Fed lowers rates. So the price rises. They're all betting on this to happen. They're saying, oh, Fed's going to help them, the administration. They're going to, give them, matter of fact, Biden is speaking today about his brilliance of the economy for the last 4 years at the Brookings Institute. That's really weird. And so that's me sipping a little of my tea, my homegrown tea. There you are. So that's what that was all about. And then the market basically says to the economy, no, we don't agree with you. Markets raise rates, Fed lowers rates. And who won? Obviously the market. There's very rare times that's why it's so unique. It's very rare. It's a very rare time when the market supersedes the Federal Reserve. And that's a unique thing in its own right. And that's why, this is a good title for this conversation. Understanding and how to look at markets and how to read them, and that's what we do here with our algorithms. So we're looking at the markets, and our consciousness mathematics is telling us no. And that's what we look at this. This is not an AI. I believe this is a consciousness. This is a consciousness mathematic. Now, what the heck is a conscious mathematic? What it is, it's not looking at past information and looking to see the characteristic of now information projecting into the future. A consciousness versus an AI. An AI is an encyclopedia. It collects history and shows you when this thing occurs again, this should occur again. Okay? That's what an AI is. It's basically a lot of like random access memory. That's what it really is. And I like to call it an encyclopedia, kind of combined with a dictionary, those two ways. Now, our math is a consciousness. Now, you say, how do you define the difference between a consciousness and an artificial intelligence? What it is that it doesn't need past events and then repeats them. In other words, the resolution or the answer or the description of the resolution is not looking back like in an encyclopedia. This is actually live reading the market and saying, okay, it did this 6 times and now it should do it a 7th time. It doesn't do that. That's the amazing part. This math is looking at it and saying, it's telling it more information than we can encompass. In other words, it's like the object on an electromagnetic field, like the original 1905 paper of Einstein's, not the magic ones with the math magic on the later years in '09 and so forth, and it's special, all this, mishmash of gravity being more dominant all of a sudden. The first title of the paper was Objects Moving on an Electromagnetic Field. Okay? That's the original paper. Our math moves in that fashion, looking at, in other words, just because it did it 6 times, our math is going to tell us if it will do it a 7th time. That's a big difference than AI. AI says it did it 6 times, it's going to do it 7 times. In our math, it does it 6 times, and it's going to tell us if it will do it a 7th time. That's a big difference, if it will do it, versus it did it 6 times, so it's going to do it 7 times. No guarantees. Our math doesn't show past historical guarantees. It reads fresh action today. That's a very unique concept. AI versus consciousness. That could be literally part of a title. That could be part of this title, but it would probably scare to death a lot of people. But that is really what our math does. It's a different form of formula. It's much deeper than AI, way more deeper than AI. And that's why we call it a consciousness, because it has like an independent train of thought. It's not looking back and saying, okay, well, it did it 10 times, it has to do it 11 times. That's what AI tells you all the time. And you know what? If AI, in AI fashion, if something does something 10 times and fails at 11, it's going to think that the next time we do it 10 times, it's going to fail at 11. But with a consciousness, it's not saying that whatsoever. With an AI, it is saying that. And that's the big difference. You know what? I'm going to put that on the chat line, because this is very important, because I've had many a conversation about the idea, the difference between difference between, caps, AI versus consciousness. Let's do it a shift con. Let's see if we can find the. Let's see where it is, right there. There we go. We'll get this right in there, and that's going to be on the title, not on the title, but on the chat line itself. Let's see if that does it. Consciousness. We'll find it. We'll get it spelled right. Get rid of that I. There we go. Conscious. There we go. Consciousness. I think I have it. Let's see. We're going to get this straightened out and get this spelled up on that line. Conscious. Put an I in there, maybe? There we are. There we go. And basically it says the state of being awake, aware, or one's surroundings. That's the difference. There we go. Let's put it on the chat line right there. There we are. Let's see. The difference between, we'll put a dot in there. This might become the title today in the end. It might become the, we may change that, because I'll tell you there is two things here we're looking at. One is we're looking at how the Federal Reserve, who has unlimited amount of money, cannot convince market participants in the largest market in the world. Now, how does that fit with currencies? What happens? We always tell you one of the most major fundamentals of looking at currencies is interest rates and inflation and GDP, gross domestic product. They look at a country in many ways like a stock. How's the earnings? Are they going to be, more productive this year than last year? Do they have stability? Is there uncertainty in the future more than usual? There's always uncertainty on some level. I'm making a case here that between AI versus consciousness, there's a we could do it this way too. AI versus consciousness, Fed loses. How about that? That would be the real title and description of this webinar today. All right, so that's what we're looking at when we look at our mathematics versus your classic just stochastic or your classic Fibonacci or your classic moving average or standard deviation. Ours is a consciousness versus a lot of them are just single-minded trains of thought. How about that? Talk about wild and woolly. I love it. All right. So there it is right there. So the euro, is a reflection of the action and failure of the Federal Reserve, because the Fed, drove the market up with the idea that they're going to lower rates when all the responsible economists who are not Keynesians or Maynard Keynesians, and moved towards free markets, free people, supply side, in other words, provide more services and goods, not starve, like in the Depression where they killed 6.5 million pigs when people were starving and buried them instead of feeding them to the population. And that's weird stuff. So you had starvation going on, and our government is trying to drive up prices, or the Great Dust Bowl of, again, poor decision making by leadership, where they are paying people to grow wheat and they over farm to the point where you generate a major dust bowl between 4 or 5 states out there west, making people think that the world is coming to an end and Pharaoh is running the country, and we have, locusts and so forth. You have all kinds of disasters going on. Boy, talk about a theoretical and practical webinar we're having here today. This is so cool. This is who I am, and it's nice to look at anything anybody wants to look at through the eyes of our mathematics. So we have no problem, when you're looking at the weekly down below. Just as when we tighten this up a little bit more, you see we went into the, where's the weekly buy? It should be right there. We went into the weekly buy. Let's put that in right there. And what did the product do? In this case, it's the euro. It found a way to be higher here, or higher from there even, and higher there. and then higher there. That's what happens when it's in a weekly buy. That's the longer term trend. And then you can see here, Fed lowers rates a half. Let's just do that too. We'll fix that in there. And market raises rates 5/8. Boy, this is like, we call the Turkish lira the great experiment because, we're watching an industrialized nation tear itself apart. And then you look here and you see, here is Europe, a modern Western nation. We're looking at very liquid currencies. Between, it goes from 1.12 down to 1.05. That's compared to Turkey. That's like it's sleepwalking, not doing a thing compared to Turkey. Turkey goes from like 1.0 to 6.0, and then next thing you know, it's at 12.0, and then next thing you know, it's 24.0, and then it's launched itself all the way up to 40.0. It's like, whoa. That's massive, what they refer to as hyperinflation. So it's interesting to watch the price action. Watch what the central banks are trying to do. And then at the same time, you see it here live, what's going on now. And it's all the difference between AI. In other words, basically the Fed runs like an AI trying to do things from past experiences. Whereas our math is looking at things in a now situation, a consciousness, an awake, not a static. AI is static in many ways. In many ways it's a static concept, whereas consciousness is a dynamic concept. And that's what it really comes down to. All right, so that's pretty cool. We've done that for the first half hour, and I'm definitely changing the title. Let me just, it's just, it just has to be. And we'll put Fed into the topic, of course. But let's see, we're going like that, and let's see, where is it at? Right there. We go A dot I. Verse consciousness. And that's really the difference. Yeah, right. They're asking now, why? Who in the cabinet would want him to talk about his economic record? You know what? I think we'll label it AI let's see, AI Fed versus consciousness. Boy, now we're really getting it in there. That's even better. Let's see. Now we really got the title. AI Fed versus Consciousness Free Markets. That's the title. I'm sending that now. Boom. Done. That's cool. That is very cool. All right. Now we're happy. And we've actually helped to describe the difference between the AI and what we believe consciousness is. An awake, a coherent decision-making process that can change and is not static like past history of AI itself. All right. From there, we'll go over to the British pound. Right there, there's the British pound. You see, this is that budget thing that really whacked the market even more there. Cable is, I don't even know how many signatures they have now. We've stopped paying attention after 3 million, they're going to have to debate it. Let's put it that way. This is not a good thing for the existing Labour Party at this point. They're falling apart left and right, just the way France is falling apart, just the way the what they call societal Marxists we have here in the States is falling apart. The difference between good decision makers and bad decision makers. And you can see here, we do see the fast moving up on the weekly. We see some strength kicking out right there, and we see the slow trying to get across the manifold, the negative side of the manifold here. This is standard deviation of our math, and so that's the manifold itself. It's a mirror image of each other, and as the lines move through it, it shows us the strength that's occurring, and vice versa when it's dropping down, just like right here. Let's see if we can move this over a little bit, make us a little bit more visual. See how it breaks the top? Let's move that line down. There's the zero line right there, the deciding line. The in-touch and out-touch for us soccer fans or rugby fans or football fans in America, the scrimmage line. And so you can see here, when it's breaking down through it, we're seeing weakness develop here. That's telling you, ooh, watch out, downside coming. And what happens? Ooh, downside comes. Coming and comes. All right. Now let's take a look at the great inflation fighters. There's the Swiss. And the Swiss seem to be trapped in that range, which is a good range. It's a fine range. It's not hurting anything. Matter of fact, look at it. It's trying to, when the Swiss is going up, it's losing against the dollar, and vice versa. When the Swiss is going down, because this is you can see it right here. That is the dollar Swiss, not Swiss dollar pairs trade. So when it's going down, it's gaining against the dollar, like right in here. And this is a Bollinger Band. Someone asked to look at the Bollinger Band. I don't remember when, but a while back. And then you can see the difference between our standard deviation right here, down at the bottom chart on the weekly, versus the standard deviation up on the price bar chart at the top. And you can see our math, when it's breaking down here like that, breaking through the manifold there, it's telling us that there's pressure. And it drifts down on the Bollinger Band and plays with the zero line in the middle. Our math is telling us to watch out. It still wants to go further, and it does. Now, looking at these two dotted lines here, the dark blue, that's just a resistance or support area we identify looking at bar charts. Nothing more than that. It's not anything magical. You see what past history does, and markets have a tendency to run to those places. That's all that is. And Dukascopy has had on the Academy, there is someone that's been doing webinars about resistance and support. So you can go to the Dukascopy Academy. So we go like that, go over here like that, and just emphasize it even a little bit more right there. And you can tune into some of those videos at the same time. And we've seen them before here. They talk about different things like Fibonacci and resistance lines, and you can see here they even have highs and lows and market behavior. Some other videos out there that could be interesting. I haven't seen them, but give them a shot. Don't be afraid of them. The worst you can do is just turn it off. All right. Let's shrink that down and get rid of it again. All right. So from there, we'll go over to the Japanese market. There's the yen. And we're going to throw in, we'll show you what the Nikkei is doing through the eyes of our mathematics this morning too. Right there. So you can see here the Nikkei, in this case here, this is the yen against the dollar. So when it's rising, it's losing against the dollar. When it's coming down, it's gaining against the dollar. We kind of think that they are going to benefit more. There we are. You can see here, we think they're going to benefit more. So, you see here the strength is moving up a little bit. we think maybe it'll roll back over again. You can see it's in a weekly sell, so we think the longer term trend is down, but it's getting very, very close. It's only minus 0.25 at this point. So we'll keep an eye on that. If it jumps back into the weekly buy, then no, I guess not. In other words, in the end result, whatever we're saying here, we have to be following the math. The math is the answer in the end. It has much more insight than I do. I can tell you stories. I can tell you past history. I can tell you what things look like. But the math is going to pick up on this, and I'm going to be like, oh, don't doubt it. It has a success rate of 0.86 out of 100. So that's not bad. So for every 86 times it's right, it's only wrong 14 times. All right, that definitely removes the zero-sum factor. And that is in gains in value and in success. All right, and then from there, let me just show you what Tokyo did too. There's Tokyo. Tokyo's just kind of hanging out up there. You can see it's in the second week in a buy right there. You can see the daily buy was like for this whole move up, and now it's kind of digesting it. And I would assume, with the way Mr. Trump is marching along globally and what he's been doing, I think there's a good chance that you see let me just stop there and describe what's running through my mind, and that is that we know that America is the engine of the world economy. We know that part. That's not anything hard to remember and figure out. And so the rest of the world economy are like cars on that train being pulled by the engine. And so what we're always hoping for is somebody else puts an engine in at the back end of the train too, and says, hey, I'll help you push in certain circumstances where you need to go. And then it makes it even better for the train to move more efficiently. And all the countries are like the cars, the conductors, the passenger cars and the coal cars or the oil cars or the moving goods and services cars, that thing. And so this is why we look at it like an engine. And like why we look at it as a train. It's an actual train. All right, and so there's the Nikkei. The Nikkei is trying to lift, and when we look at it, let's see, we'll go over here instead. Not there. Let's get rid of that. There we are. And we'll go here. You can see even with it underneath, you see these red dots. It's telling you that there's a little weakness in here, and obviously you would take your profits from that when you see that. As soon as you see that, you think, okay, I'll take some profits. Not to get short per se, depending on your gamma position. That's the only way you would decide yourself to be short or just take a profit. We always say that's what that's all about. And you can see here, on the algorithm for the last 3 days, it's been pressing down, telling us that there is weakness. And then obviously you can see it here, where it was, but look at it now. There's the 10th. And that is also the 9. Yeah, so it's not showing us the algorithm yet because this is a foreign market, and they won't show it to us till like 11 o'clock Eastern Standard into the U.S. Open or towards the U.S. close, that type of thing. So right there, it's been in a sell since right here, these 3 days, the 5th, the 8th. It's supposed to be the 8th. Where's the 8th? So what's it doing? How's it can be the 6th? 9th and 10th. Okay, so there's the 6th. There is the 4th. There's the 5th. And you can move these things and make them align more like that. That's the power of our beta platform. If you would like to use our beta platform for free for a couple weeks and experiment with it, no problem at all. Just contact Robin here like that at Chicago Quant Technologies. 2-week free trial right there. Yes, indeed. Bingo, bango, bongo. All right, we go back to that. Bring it back down. And that is that. There we go. All right, now from there, let's go over to the great experiment when we look at currencies. See what they're doing now that Syria is dipping a little bit. Let's see what they are doing about that. Breaking down, so it's gaining against the euro again. See, we really do believe, at least I do, that the euro shows is the true influencer of the euro Turkish lira pairs trade, because when it's more of a strong or weak euro that's making it go up and down more than it is a successful decision making process in Turkey itself. And that's why we were in a long sell. Hadn't seen something like that in over 4.5 years, going into 5 years. Went into a weekly sell, and we are now at the 11th week. Is it? What's it say on the? Let's see if we can find it on our. There it is, right there. We're going on the 12th week now. Last week was the 11th week in a sell and 3 days in a buy, and now it's trying to push back into the sell today. And we're still in a weekly sell. So they're not actually wicking up the Turkish economy and making it more functional versus less functional. That's for sure. All right, and then from there we go down to South Africa, and when we go to South Africa, we're looking at the productivity of gold. The country is like a mini Turkey when it comes to its currency and so forth. It's gone from 2 under Mr. Mandela all the way up to almost 20. So it's not exactly the prettiest picture of currency and inflation. They've actually felt the same as Turkey. The hyperinflation, the only difference is that they have so much gold that they're able to help part of their GDP because of that. All right. Okay. So, as you can see here, this is the South African Rand, and we go and look at the metals complex. You can see it's trying to move down, I guess you could say. It's got that something slope going on. You see it right there. It popped up, and gold fell hard. And now let's go take a look at gold. There's the gold, and you see that it was running up from that move, and now it's been sideways, and we're starting to see some buying again. It's went into a buy here and barely did anything, but you can't take that buy serious. Why, traders? For those that are experienced that watch our webinars, know we're in a weekly sell now since up in here. This week we went into a weekly sell right in here, up in the 2740s, 50s area, and so. What is that? 2720, basically 2719 settlement. A high of 2741 pushed us into the weekly sell, and we put it in at the. You can see it. There's the line reminding us that below the zero line, right? Isn't that right there? So. It wasn't a real long sell-off. It only took it down into the 25s and change. We jumped right into a daily buy, and it lifted it right back up into the 2740s area again there. And then you had a little distortion kick out there, threw us into a sell. But you weren't long. You weren't long this. You were just protecting your. You were protecting your short basically, and obviously it gave it right back to you all in one day. Because we're in weekly sells since here, so we know when you're looking at your gamma that it's definitely not a place to be long. Protect your short, but don't be long. And that's, you can see the sideways action took us nowhere. Then we get into a little daily sell, and you could trade that for the day overnight if you want, solely because it pushes you into a daily sell. And it goes from 2650 down to 2635, and just a $15 drop. Again, adjusting your gamma for those traders out there that use option or binary derivatives, which we do a lot here. And now you can see we're trying to climb into a daily buy here. Would be nice. You can see on the weekly, we do see the green line breaking through the bottom of the manifold on the negative side, saying that there's some strength trying to kick out. You can see that upwardly strength. But right now, it's still not doing anything miraculous. It's not like flipping it into the buy yet, but not bad. Look at that. The histogram is so tight now, heading towards the zero line. So it's only at -5 and change, and the green line is at -10 and change. So that's 2 standard deviations. That's what those two are, the green and the white histogram. The blue dash line is a faster histogram. It's a 3 average. The blue dotted line, that is a 3 standard deviation of the same mathematics. The consciousness. And then from there, we go take a look at silver. Silver acting much stronger. But we had that conversation last week and I think even yesterday about the idea that it's still like 30 some odd. Is it 30? Yeah, it's like 37% off all-time highs, whereas gold is only like 6% off of all-time highs. Copper is in the middle there, 20 some odd percent, and there is copper. Now that's interesting. Copper is pressing down a little bit today, but again, we're in a weekly sell, so you don't want to play the long side. The only ones you want to play is like the short sides on the daily signals here. Look how choppy it's been. This is the election. They in November, they knew that that Mr. Trump is not exactly going to make their economy grow the way they want to grow it. The economy is only going to grow through responsible economics. So they had to start doing their sugar high thing, and they had to start doing anything they could to try to motivate their economy in a Marxist way, of course. So let's take a look at the Shanghai index and see what they're doing with that today. I saw they gapped it up and knocked it down. So that should be interesting. There it is right there. And you'll see it now too, right there. I'll just go like that. So they gapped it up and knocked it down. And as you can see, we've been in a weekly buy for 2 weeks now. This is the second week, and it's been in a daily buy for a bunches. You can see it right there. And last night they broke it down and pushed it into a definite sell on a day-to-day basis. Now what we need to see is the weekly change its direction. All right. From there, we will slide over to the platinum. Right there, there's the January contract. You can see it's trying to climb into the buy today. It's been in that weekly sell since the 1,000 plus area. We've drifted down into the 930s and 40s from it, and it's trying to make a little lift in here. You can see it's above the zero line. It's 1.73 above it at the moment, but the weekly is in that sell. So this is just telling us that another dead cat bounce thing going on. Got to take profits somewhere along the line if you're short it. We like to call it the most dangerous short in the world. All right, and then from there we'll go over to the energy sector. Let's see what's going on there. Here's let's put Brent up. Let's see where we got. Good, we're right there. So let's go over and take a look at Brent. I don't know if I showed you platinum. Let me just show you platinum real quick, like that. There's what we're talking about. There's the 6 weeks going on a 7th week in the sell, lifting up. It is. It's trying to lift up. You can see the green lines trying to turn. Histogram, of course, showing you that it's through the manifold there, but it's got to get through the zero line right here, get into the plus to make the change. Now let's go over to Brent. We'll see Brent, and then we'll go look at the West Texas Intermediate. BZ. Bingo, bango, bongo. And there it is right there. And you see it's showing a little weakness today compared to yesterday's pop. And go back to that. You can see we are pushing hard into the weekly sell. Now we've seen this thing going like weekly sell, weekly buy, back to weekly sell, weekly buy. They don't know what to do. They know that Mr. Trump is going to flood the world with more oil. we're going to be the swing state. So they know that they want to basically not be long. At the same time, you have Damascus falling. You have Tehran basically devastated in so many different ways, not counting the fact the Israelis knocked out their whole air defense system across the country. So they're sitting there naked. That's why they're not coming to rush to help Syria. Because if they start rushing to help Syria, the Israelis would probably pounce the hell out of them. So in other words, they have to stand to the side and watch and put up with what they've created. Chaos. All right, and then so there is Brent trying to work its way down. You can see here on the daily algorithm, it's still underneath, going on a fourth day. It's close. Look at how close that is. It's still minus by a hair of its chinny chin. You can move this along. You can see right there, it's just minus. Just minus. And we're in a weekly sell, so you have to wonder, ooh, what are they going to do to this poor thing? Knock it down? Now we'll go look at West Texas Intermediate. Sweet crude doing the same thing, moving down a little bit. It's 4 days in a sell too, as you can see here on the algorithm. Right there, we just need, and we see the weekly doing that same thing. Barely got into the weekly buy last week, but right on the first day yesterday was right through there in minus. So it's pressing down. And like I said, people know that Mr. Trump is going to make the United States the swing producer when it comes to world oil. All right, and then from there we go over to the one of the derivatives, or one of the manufactured products out of crude, and that is kerosene / diesel / heating oil. This particular chart represents what feeds the big trucks on the roads, the diesel. What feeds the big airplanes in the sky, that's the kerosene diesel. And what heats homes here in the United States, which is the heating oil of the diesel and the kerosene combined together. It's one product. You can basically, I've run my tractor on every one of them at any given time, and I'm sure you can run an airplane on the same. I think they clean it up a little bit, make it a little bit nicer, but a little bit more refined, maybe not as thick. You can really make the stuff thick, burn for big heavy furnaces. But this is the product that's made out of it, out of the crude oil that we use. And you can see here the last couple of days has been in a buy, and it jumped in there, but you couldn't trade it. Why, traders? Because look at it, the last 3 weeks it's in sells, just like it's been going down for the last 3 weeks. It's telling us that no, it's great, we need it, yeah, but there's going to be more to be being provided to us, so prices go down. From there, we'll jump over to natural gas, which we are the #1 provider in the world of that. And Mr. Biden has tried to stop that, which is really weird. But anyway, you can see here we've been in a daily sell on that thing for 6 days now, and 2 full weeks. Or not 2 full weeks, 1 full week, and starting a second full week. And so you see the pressure on that. And that is the natural gas. And then what we'll do is we'll slide over to the Spanish energy company, EN, out of Spain, just to try to get they trade a lot of natural gas, and obviously, ooh, there you go. There's a smackadoodle, and we knew that weekly sell yesterday was telling us something. Look at that. They drove that thing down from, this is the stock, from 311 on basically 312 with a 312 high down to closed at 13, and today it's trading at 1250, and it was as low as 1241. And it's been doing more sells on a weekly basis than buys. And last couple of weeks here, the strength that was coming into it was in a weekly buy up until last week, and it threw itself into a daily sell here. Then it tried to go into the buy, and you could play that little move there because we were in the weekly buy right there. And then you can see here, yesterday they drove it into the sell towards the end of the day. In the morning we were showing you in the webinar we were showing it, and it was it was up higher and and unchanged, and we were like, oh, okay, it's carrying on to a third day. But by the end of the day, they smacked it, knocked it down, and threw it into a sell. And then today, there's the 10th. You see this thing's driving down more, and we're going to be seeing, later on today, we'll see another algorithm. The algorithm will update, and that'll make it happy and tell us even more damage going on. All right, that concludes our energy side of the conversation here. If anybody would like to see anything particular, you know what? Let's do this. Oop, not that. Let's go take a look at Aramco. With all the noise going on in Damascus and so forth, let's see how they're treating Aramco. We've been seeing the strength in it because, they'll produce more to compensate for the lower prices. Because Aramco has that potential, which is cool. In other words, if Mr. Trump wants to be the swing state, Saudi Arabia will do a free market thing and say, hey, we're going to compete with you. So let's put Aramco up there, and there is Saudi Arabian Oil Company. Right there. Yeah, look at it. See, all that's telling me, you can see here, it's in a weekly buy for 2 full weeks down in here, that week, last week. And you can see it's run up. And so those who are looking at the crude or, the Brent and, the West Texas are thinking, oh, sell, sell, sell. No, see, this is the consciousness right here saying, no, no, no. AI would say, oh, if oil is dropping, then you would want to sell Aramco. But our consciousness is telling you, no, don't do that. It's not the same. AI is definitely just an encyclopedia. It's a slice between being a dictionary and an encyclopedia. And consciousness is a decision-making, conscious, awake, form of decision-making. Totally different from acting like a dictionary or encyclopedia. All right, from there, where do we go from there? We got a title. Can't complain about that. We got a title up there. I love the title, The Difference Between AI versus Consciousness. And I think on the we've already sent out the title on Dukascopy, so I think we labeled it as, I think we made it even a little bit more touchy-friendly for people to, say, hey, what the hell is he talking about? Title, AI Fed versus Consciousness Free Markets. That's it. I love it. That's the game right there. All right, traders, this is Doc. Got a little started slow this morning for whatever reason. I mean, I was in front of the screens just loading things. I don't know why I didn't get on there. My brain was definitely running hot, straight, and steady. So, happy trails to you until we meet again, which will be tomorrow. Happy to hump day. Happy trails to you, to all our trading friends. All right, traders, have a safe and smart trading day. And if you have any questions, just shoot it over to anywhere you want. We're always listening one way or another. So, arrivederci.